You're watching Business Today with Sumire Sugimoto and Rico Hizon.
Good morning and welcome to this Friday. It is the first day of November. You are watching CNBC. This is Business Today. I'm Sumire Sugimoto.
And good morning, everybody. I'm Rico Hizon. Topping our business and financial news headlines this morning. Today's...
Joining us now is Philip Chan. He is Research Director at Shanghai Hong Kong International Securities. Philip, always good to see you. Good to have you back in our studio.
Good morning.
First of all, let's look quickly at the broader market picture. Both Shanghai and Shenzhen have been very volatile markets this year.
Yeah.
How worrisome is that for investors, even despite the gains we've seen?
Yeah, it's mainly been on the Asia markets, right, and they're closed to foreigners anyway. But I think it's just a pattern that we have seen in the past as well. There's strong volatility ahead of some major news, which may come out, which could be bad or could be good. And it's rumored that the CSRC is trying to control the volatility in the markets in some way.
So it may come down a bit. All right, let's take a look at the very first stock today. It is Guangnan Holdings.
Yeah.
Now, this firm is a market leader in Hong Kong in sales of freshwater fish, poultry, and vegetables.
Yeah.
Guangnan stock ended yesterday at 5 Hong Kong dollars and 25 cents. And as you can see, the stock price has been gaining for some time. It's about double what it was, I guess, at the start of the year.
Yeah.
Guangnan itself has expanded with acquisitions in food-related businesses. Philip, how is that affecting profits?
It's been affecting it. Well, it's been positive to profits because they have for many of these acquisitions they've ensured there's a guaranteed profit for the first couple of years.
And they have a good cash flow then.
Yeah, that's right.
Now, it does dominate Hong Kong's fresh foodstuffs market.
Yeah.
Here are some numbers: a 98% share in freshwater fish, 87% in vegetables. How is that possible?
Well, because it's controlled by, you see, that sort of market share is controlled by the Ministry of Guangdong, and then they've given certain franchises to this company to be able to control that import of fresh fish.
And you figure those franchises will continue?
Yeah, for the
So what's your recommendation?
It's a buy.
All right.
Yeah.
All right, moving on to our next stock. This is Chiwan Wharf, a port service company operating in Shenzhen. Chiwan saw first half 1996 profits drop 10% due to a decrease in throughput of several goods, including fertilizers and construction materials. Now, B shares of Chiwan stock closed yesterday at 3 Hong Kong and 37 cents. Philip, Chiwan faces some keen competition from some other port service companies. Do you see a pickup in earnings for the second half of their fiscal year?
No, there's going to be more or less unchanged profits in the second half, and in fact we're looking for maybe steady earnings in the next couple of years. But that's mainly because they've been expanding into other areas of business.
So a safe hold?
Yes.
That is a recommendation.
Yeah, that's the hold, yeah.
All right. And the last stock is actually a competitor to this company, China Merchant Shekou Port Services. We should point out that if you take the ferry from Hong Kong to Shekou, just over the border, you will arrive at Shekou Port Dock. This company saw a 6% decline in first half earnings. B shares in Shekou Port closed Thursday at 3 Hong Kong dollars and 38 cents. Yeah. Now, the last stock, Chiwan, was a hold. This stock, Shekou Port, it has been diversifying into trading ventures and other investments. Has that been a good idea for the company?
Well, to keep profitability, it's a good idea, but it's moving away more from its core business, and that's why we've not liked that diversification.
Why not?
Because it's stretching the management resources, and also because we feel that some of those businesses are not that good quality anyway. It's not like the Chiwan expansion. The Chiwan expansion has been into businesses which we think are quite related.
So how would you compare the management of these two companies?
I would think that at the moment the Chiwan are making the better moves on the corporate front.
So then you don't expect earnings to pick up in the next year or so for Shekou Port?
No, not dramatically. More or less unchanged.
And your recommendation then?
Is to sell.
All right.
Yeah.
Thanks very much. I understand you're very busy because of the volatility and the volume we've seen in the Chinese markets. Thanks so much for making some time for us.
Thanks a lot.
Philip Chan, Research Director of Shanghai Hong Kong International Securities. And to summarize, Philip says, buy Guangnan Holdings, hold Chiwan Wharf, and sell Shekou Port. A reminder for you, the opinions expressed here on Buy, Sell, Hold are those of our guest and not of CNBC.
U.S. stocks aim